It's Taylor Swift in her legendary blank space. I'll leave it up to you where the blank space is. 8:40 here, 20 before 9. Time to check in on your money and find out what the Sam Hill's happening on Wall Street. Downtown Sebring, we go to the offices of Statler Financial Services, where Phillip Statler is standing by. And Phillip, it was almost a nothing day on Wall Street yesterday. We didn't move much, and I generally expect bigger moves right after a Federal Reserve interest rate cut, one way or the other. It looks like the smart money can't figure out what to react to either, can they?
Well, I think that basically after Powell came in and after that little bit of a dip that on Wednesday, that basically, yeah, they don't know, and they don't know what the Fed's going to do. They're really not sure. The economic numbers are giving them some cause for some pause, and I think earnings are somewhat revealing. And then you got the Fed president. I mean, not the Fed president, but one of the Fed guys talking, and he's not raining really big on anybody's parade either.
Yeah, I mean, Bullard was out this morning talking about how we're already in a recession, and dissent in the open market committee was because that the Fed governors are all worried about the slowing economy. I was saying this before we went on the air. Doggone it all. It's as possible to talk ourselves into a recession as the business cycle is capable of throwing us into a recession. We can go two ways, and talking ourselves into one just kind of hits me at that bang my head on the wall level of foolishness, right?
Well, I think we can, but I think we can also, yeah, I mean, we can talk ourselves into it by saying, hey, it looks like it's coming. We need to pull back, and everybody pulls back at the same time, and it throws us into that recession. But let's be clear on what Bullard did say. He didn't say we were in a recession. He said manufacturing appears to be in a recession. So he's looking at that sector and saying that sector is already in a recession. And let's face it, they're a heavy borrower. So he's thinking we need to lower interest rates more than what we did to help out the manufacturing sector.
And that explains what he was. I was trying to do a little research and figure out whether he was one of the noted hawks or doves on interest rates. He's been one of the more dovish interest rate advocates, huh?
Yeah, I think so. I mean, he's looking at things and thinking that maybe we needed to drop rates more than 0.25% this last week.
Okay. Responding to the markets as a whole, I mean, we're shifting money back and forth, but they seem to be generally staying in equities. I was reacting to, a 52-point dip on the Dow yesterday. NASDAQ was up by 5.5, and the Standard & Poor's was up, 6 rock-crushing cents. That almost looks like a business as usual day instead of with all the variables that are going on. I just kind of sum total it up as saying investors really don't know what to expect, so they're just basically shifting within equities to take their bets on strategy.
Well, I think that could be a possibility, but the other thing I think we need to look at today is what they call quarter witching day. So it's quad witching day. So we have 4 different things today that are coming due in terms of futures. We've got different things expiring. So we've got the index futures expiring, contracts expiring there. We got index options expiring. We got stocks options expiring. And then we got single stock futures options expiring also. So we got 4 different things. And the strike price on the S&P 500 futures option is 3,000. There's $8.3 billion in that trade right now. And so the articles I was reading say expect the S&P 500 just to hang around 3,000 today, with all the in and outs and things changing places today because it expires today at 3,000. Expect that to kind of be the number in and around that number is where we should end up today.
That number again that we've got betting on the S&P ending at 3,000 sounds inordinately large for the number of options placed on a specific number.
Yeah, I mean, I don't have any history on what that looks like, but $8.3 billion is, I mean, to me, is a lot of money.
Yeah.
Yeah. So.
And knowing that we're starting the day out at 3,006. We're right near that neighborhood to begin with. There might be a tinge of downward pressure, but we're certainly in the neighborhood for those expirations, aren't we?
Yeah, we really are. I mean, everything's pretty much green across the board this morning, but they have dropped since I woke up this morning to where they are right now.
All right. Yeah, we're looking at another relatively uneventful day. Looking at the futures so far this morning. Anything else likely to affect our money today?
You know, I don't know. There's been some upgrades and downgrades. We got some increases in dividends that have come out. Roku I found kind of interesting because we've got a new analyst coming out and following it and putting a sell rating on it. And then I look at another article, and another company has raised its price target by another $10 or $15 a share. So I'm not sure what everybody's looking at there, but the people that say sell it think that the streaming devices, the things that allow us to stream this stuff, is the price is going to go to zero. Nobody's going to have to pay for those. They're going to have to pay for the service, but not for the actual device. So they think that's going to hurt Roku, I guess.
That's an interesting outlook, but it's kind of the way cell phones went for a long time too. You buy the service and you got the cell phone for free, and that business model went away all of a sudden, and now we're charging $1,000 cash for the cell phones. There's a cycle, isn't there?
I think so. I think you're right. There definitely is a cycle there. I see J.C. Penney's is trying to restructure their debt ahead of the holiday shopping season. Not talking about bankruptcy at all, but just talking to their debt holders, trying to see if they can't restructure some of their debt.
Understood. Other things going on that I notice as I watch my market ticker going on, the other Fed governors are now jumping into the fray after Bullard says he wants more interest cuts. One of them says that he dissented because he didn't think the rate cut was needed. Another one is actually throwing howitzers out saying rate cuts further risk inflating the prices of risky assets. Boy, we got a whole bunch of government employees that can't agree on what time of day it is, right?
Well, I think that's true. I also saw another report from a billionaire guy that owns a financing type company, said that we didn't need to be lowering interest rates either. He thought we should have held on or even increased interest rates for that matter. And talking about interest rates, we talked about the repo yesterday, and
Yes.
you know, it's one of those things that's hard to really understand, but it's a way to put money into the money supply. And the Fed did another $75 billion repo today. That's for this week. I've got to think that that's got to be some indication. I'm not sure exactly what it's indicating, but it's got to be telling us something. And I'm sure next week we'll get some reports on what it's telling us.
Yeah, putting it in shirt sleeve English, it boils down to the Federal Reserve buying more bonds that are out there, and like you say, putting more cash into the economy. It's kind of quantitative easing without calling it quantitative easing would be the best shirt sleeve definition. Wouldn't you agree?
I think so. I think that probably would put it where everybody understands what it is. Yes.
Best we can do with the process. I've noticed that the federal bonds are pretty much holding steady too, off by 1 basis point this morning, and they've been relatively steady this week. So it's I wouldn't say a nothing day on Wall Street, but definitely an uncertain one. Setting the table this morning, I'm looking at, like we said, $52 down on the Dow yesterday. Nasdaq was up by 5.5, and the S&P was within a net's breadth of being dead flat even for the day. 45 minutes before the money gets thrown around on the last trading day of the week, Phillip, on Quad Witching Day. It sounds like Halloween about a month early. Where are we going anyway?
Hey, right now everything's tweaking up just a tad. The Dow and the S&P 500 both trading up about 0.15%. The Nasdaq's up 0.25%. Gold's basically flat. Silver's flat. And crude oil is down from where it was yesterday morning when we talked, but up from where it closed. It's up about 0.9% to $58.64 a barrel.
And I suspect that Saudi Arabia is going to be driving that, depending upon the progress of repairing those oil wells, wouldn't you bet?
I think so. Probably so.
Expect so. Talking about the overseas markets, by and large, about the only market that got spooked by the witches was the Hong Kong market. It was off by a bit because their domestic turmoil continues. Japan and the mainland Chinese markets generally up at the close early this morning. Europe pretty much evenly up by a bit this morning, 45 minutes before we open up. Phillip, it's a weird time in the markets. Even the Federal Reserve governors can't agree which way the economy is going. If there ever was a sign to get some professional advice to stabilize a retirement fund, this would be it. How do I find you on the phone?
If he gives us a call at 382-0037 to schedule a report to really look at their current portfolio to determine how much risk they have and make sure they've got it allocated properly. We also have our free report on retirement strategies. Hey, if you are 5 to 10 years out from retirement or already retired, this is a great report on strategies you can use to benefit you in retirement. All you have to do is text the word retirement to 863-285-3815. And then join us every weekend day for the Statler Financial Radio Show, 6 a.m. and noon on Saturdays, 10 a.m. Sunday mornings on News Talk 730.
Gotcha. NewsTalk730.com to stream it as well, because we're there as well. Phillip, thank you so very much. You have a great weekend, and we'll catch you on Monday. Fair enough?
All right, man. Thanks. I appreciate it. Have a great weekend, and we'll see you Monday.
You too, my friend. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Of all the questions.
Hey, folks, again, I want to thank you for joining us today. I hope you got something out of what we and Dave and I had to talk about this morning. Again, if I can help you in any way, please reach out to us at 863-382-0037. And don't forget our free report at statlerfinancial.net/LM-3. Have a great weekend, and I look forward to speaking to you again on Monday.